In focus tonight, earnings season, which kicks off tomorrow with Alcoa reporting. Both investors and analysts agree on one thing: it's not looking good for companies' bottom line. So what should you, the small consumer, the investor in your 401k, do about it? Here with more, Wayne Kaufman, Chief Market Analyst of John Thomas Financial. Wayne, great to see you. Now, the expectations for earnings seasons, particularly this quarter and next year, not entirely positive. You tend to disagree. What do you say?
Well, I know that I do agree with that. They're bad expectations, but that has been in the media for a while. So I think investors have already positioned for that. Everybody knows, I believe, that pre-announcements have been running. The ratio of negative to positive pre-announcements has been running 4.3 to 1 versus the long-term average of 2.3 to 1. So I think a lot of this is already
baked into the numbers.
It's baked into the numbers.
All right. Well, you know, we've got a lot of names coming out this week. Everybody from J.P. Morgan to Yum Brands. But let's talk a little bit about the future outlook, and let's look at 2013 for just a second, because I think what's interesting is, while analysts have ratcheted back their expectations for the upcoming quarter, they haven't done it for 2013 necessarily. And you see S&P 500 earnings estimates at 13%. You see S&P 500 or S&P small cap sector up 25%. Are those numbers going to come back down? And if that happens, who's going to disappoint?
I think that that's one of the reasons that the large caps have been outperforming recently as opposed to small and mid caps, is because people aren't respecting those numbers so far out. But it's very hard to talk about 2013 without talking about the election. And
that's true.
And the fiscal cliff that's coming up. That's really important. Now, longer term, I'm very bullish. But we have to see some things take place. The reason I'm bullish is because you've got a synchronized global asset purchase program going on around the world. You've got the Fed, the ECB.
Central bankers are printing money ad nauseum.
Central bankers are doing that. And what's that makes sure that interest rates stay low. So you've got the spread, the so-called Fed model evaluation, the spread between equity yields and bond yields is very attractive.
So let's talk, though, for a second about what might happen to the market if we don't get some pull back from this fiscal cliff in some way. What's your expectation?
If this earnings season is worse than expected, because again, I think a lot of it's built in unless it's really terrible. And if, I don't want to be overly political, but I think that if President Obama is reelected, that it's a problem, and I could turn very bearish on the market for the balance of the year.
Sell-off.
You could see a sell-off because I think people will forecast problems out there. Conversely, if Romney is elected, I think that it's a whole new ballgame, and I could be extremely bullish on the market going through till March or April.
Is there any sector that can weather this storm? Are there parts of the market you think, wow, I'm really not worried about this area?
Definitely. You just had a guest on who talking about, restaurants. So I like financials, healthcare. No matter who's elected, people are worried if Obama's not reelected, then healthcare might not be so great. But I disagree. I think healthcare is going to be good anyway. And consumer discretionary stocks, like a lot of retailers or like these restaurants. He was talking about some very positive trends that he's seeing, so I agree with that.
Wayne, one of the issues that we've seen over and over again this year, and one of the things I'm really concerned about, is that small investors, regular investors like me, they've pulled out of the market. They don't trust stocks. They don't trust the stock market. What would you tell them tonight?
I would tell them that the conditions are set for a tremendous bull market to go through quite a few years. Once we solve some of these problems, if we do get Romney in there, you're going to have tremendous. The United States is sitting on a tremendous amount of energy, our own energy. That's a huge thing. Historically, a lot of people don't know it, but the best year in a decade to invest is typically the years that end in 2. So.
Now, there's a fact I've never heard.
That's the truth. So what you've got is you've had this huge middle class growing around the world. So if we can get through some of these problems we've got ahead of us now, and I think it takes new leadership, but if we get that new leadership, I think we get through that. I could paint the picture for a real super bull market.
American companies serve those middle class folks in other countries.
Exactly right.
Wayne, thanks for coming on tonight. Really